This is Dan Stewart for your NORAM Asset Management Market Update, Wednesday, October 13, 2010. It was a broad-based rally in the markets today, led by commodities. The Dow was up 75 points to 11,096, the S&P was up 8 to 1178, and the NASDAQ was up 23 to 2441. Oil was up $1.29 to $82.96. Copper was up 3 cents to $3.81. Gold was up $24.60 at the stock market close to $13.70, up almost 2% on the day. Silver, the big winner, was up 86 cents to $24 even. Silver was up almost 4% today. Volume confirmed this rally. Volume on the New York, the big board, was 5 billion shares, 20% higher than its 30-day moving average of 4 billion shares. Volume was up 10% on the NASDAQ from its 30-day moving average, and the NASDAQ came in at 2.2 billion shares traded. Its 30-day moving average was 2 billion shares. Again, it was commodities. That was the big story. Also, JP Morgan came out and beat third quarter estimates, and their profits were up 23%. But if you read between the lines, they reduced their loan provisions, their loan reserves, by half. They also said loan demand going forward, their loan demand is down, is slowing. You can't have sustained growth when your business is slowing down. So a lot of that had to do with accounting. That's the whole reason for quantitative easing too, by the way. The government knows how the economy is slowing down and, more importantly, the financials. Without the financial sector growing, they're the ones, the engine that lends money and capital to businesses. Europe was up across the board. The Euro Stoxx 50 was up over 2%, along with France, Germany, and Spain. Most of the others were up between 1% and 2%. Eurozone industrial production came out higher than expected, and they also rallied on our U.S. stimulus, QE2. The Asian markets were up between marginally, like Japan, just barely positive, and up to 1.5%, like China. India bucked the trend and was up 2.4%. Asia was up on better machine orders from Japan and again on our U.S. economic stimulus. That's why I have been saying for the last weeks, this QE2 stimulus is going to be good for the stock market short and mid-term, commodities for the long term, and bad for bonds. The government doesn't believe that our economy should ever contract or shrink, that we should constantly grow. I thought from my economics in college that was called the business cycle. This has been Dan Stewart for your NORAM Asset Management Market Update, Wednesday, October 13th, 2010.